Hi everyone, Stephen Lee here. Great news, the SBA just released additional guidance in regards to Schedule C filers and how to calculate your PPP loan request using gross income rather than net profit. In this video, I'll be covering the following 3 questions. Number 1 is, who is a Schedule C filer? Number 2 is, how do you calculate your new PPP loan request if you are a Schedule C filer? I'm going to do an on-screen tutorial for that section. Number 3 is, if you are a Schedule C filer and you've already submitted your PPP loan application, what can be done with this new guidance? I'm going to answer that question at the very end. With all my videos, I've included the source of where I got this information from and in the information section below. So in the, you're going to see links to the newly revised PPP application forms, as well as the revised frequently asked questions in regards to PPP loans and applications. So let's get right into question number 1. Who is a Schedule C filer? Like, what is a Schedule C? The Schedule C is a schedule included with the Form 1040. It's not a separate tax return, right? Schedule C is included in your personal income tax return as a separate schedule. Okay, so it's not a separate form. Schedule C is required to be completed and report income or loss from a business you operated or a profession you practice as a sole proprietor. So Schedule C is for sole proprietors, okay? Schedule C is also for those who are gig workers, independent contractors, as well as single member LLCs who have not elected S-Corp status, okay? Single member LLCs who are still considered a disregarded entity for tax purposes. Okay. Remember, a Schedule C is used to report the income and expenses, okay, of a business, okay, not a hobby, a business. Remember, if this is the kind of content that you're looking for, don't forget to subscribe and turn on your notifications. All right, let's take a look at how to calculate the new PPP loan request if you are a Schedule C filer. So if you qualify as a Schedule C filer and you have not submitted your PPP loan application, or you've submitted it already, how do you calculate it using gross income? And we're going to do a screen share now for this section. All right, so we are going to be looking at the new formula to calculate the eligible PPP loan for Schedule C filers, okay, using the gross income method, not the net profit method. So let's first go to how do you find these forms, okay, these new application forms. If you're looking for the actual form, you're going to go to the SBA.gov website, okay, SBA.gov, and then you're going to look at go to Funding Programs Coronavirus Relief Options. Scroll down to the PPP, Paycheck Protection Program. Okay. And then you're going to be looking at here, there's going to be different. First draw is if this is the first time you're applying for a PPP loan. Second draw is for second, and this is for loan forgiveness. So let's go to first draw PPP loans. You're going to scroll down here. You're going to look at, there's all these different things here. This is the frequently asked questions that I was mentioning in the video, right? For lenders and borrowers, dated March 3rd, 2021. Okay. So this is going to be the most helpful here. So the frequently asked questions. And then to come up with the actual form we're going to be looking at is this one right here, Paycheck Protection Program, First Draw Borrower Application Forms for Schedule C filers using gross income. So you click on there, and then you can download the PDF, okay? And once you've downloaded the PDF, it's going to look like this, okay? This is what the PDF is going to look like, okay? In order to fill out this PDF, what you're going to need to prepare and have on hand is your 2019 or 2020 Schedule C, okay? So here you're allowed to use either your gross income from 2019 or 2020 down here, right? So you see that. So Schedule C, just to review, looks like this. It's Schedule C, part of your Form 1040, profit and loss from the business. This is the 2020 version, but this is what you're going to need, either 2019 or 2020, whichever you can use. You can choose either of the two, okay, either 2019 or 2020. Okay, so let's go through this application. This top part here is pretty self-explanatory. I think we've all seen this. We've seen many tutorials about this, so we're going to skip this area. The one thing I do want to mention is the year of establishment here. This couldn't actually be filled out non-applicable. Okay, you do not have to put in a year of establishment here based on the rules. Okay, so you don't have to put in anything there. And then for the number of employees here, for many sole proprietors, this area, including owners, it has to be a minimum of 1. Okay, so you as the owner, a minimum of 1. So you cannot leave this as 0 or blank. And then also here in this area, it's going to ask you the tax year used for gross income. Okay, so gross income here, we're going to go over that in just a moment. Where do you find that? You're going to have to select either 2019 or 2020 on this application. So let's go to gross income. How do you find that number here? It says you're going to find it on the IRS Form 1040, Schedule C, once again, line number 7. Where is that? So let's go back to the Schedule C. Okay, hopefully you have that next to you. And go scroll down to line number 7. This is the gross income. Okay, line number 7. Not gross receipts, not gross profit, but line number 7, gross income. This is what you're going to be using. So take this number from line number 7, and let's say this number is 200,000. Okay, let's just use that. Okay, and let's go over here. Let's add this here, 200,000. Okay. And then let's say we're using the 2020 year here, right? So we're using the 2020 year. And then so you're gonna mark that box, okay? Let's adjust it here, right? So that they know that we're using the 2020 year, okay? And then the number of employees, once again, it's gotta be a minimum of 1. Okay, so in our case, let's say we have 1 employee, okay, for this example. If you do not have employees, there's 2 different sections here. There's one for if you do not have employees, like our example, and this one here is number 2 is if you do have employees, okay, other than the owners, complete this table. Okay, so let's go over this first example is only 1 employee, that's yourself, the owner. Okay, so it asks for this first box is your gross income from above, your amount from 2019 or 2020, Schedule C. So above, we know that our gross income that we use is 200,000. Okay. And then here we divide by 12. Okay. So what's 200,000 divided by 12? That equals 16,666. Okay. But it says if it's more than 8,333 and 33 cents, enter 8,333 and 33 cents. Remember, this goes back to that $100,000 cap allowed for annualized salary. So no single employee, including owners, can apply for a PPP loan if their annualized salary is more than $100,000. So it's a $100,000 cap, and this is the amount here. Okay, so if in our example, even though ours was 16,000, we're only allowed to put in 8,333. Then you come over here, and then you multiply that 833 and 33 cents by 2.5, right? And then we come up to another familiar number, is that 20,833 number, right? That's the cap. This application also asks you to add an EIDL loan, okay? An EIDL loan. That EIDL loan is only if you is refinancing your economic injury disaster loan. Okay, if you're refinancing it, this is where you add the outstanding amount of an EIDL made between January 31st, 2020 and April 3rd, 2020 to loan request as indicated on the form. And do not add any EIDL advance that you receive. Remember, the EIDL advance was $1,000 per head count, right, per employee that you included. So do not include that in here. Remember, this EIDL is only if you're trying to refinance your already existing EIDL loan. In our example, we do not. Okay, so that's pretty much how to calculate using the new gross income method for someone with only themselves, no employees. And remember, employee here, it's also important to note that we're not including independent contractors or contractors that you pay from your business, okay? They are ineligible to be included in the payroll amount, okay? So if it's just yourself and you have no employees, right, those people that you pay as a W-2, then you only include that. Let's do an example here, and let's change this to say that, you know, this is 2 employees, okay? This basically means the owner plus an actual employee. So let's go down here and fill out this section here. Let's erase these amounts, okay, so we don't confuse ourselves. Okay. So here, if you have employees, complete this table. Okay, your 2019 or 2020 IRS Form 1040 Schedule C, line 7, minus the sum of line 14, 19, and 26. Okay, so let's go back to the Schedule C, and it asks us to take this number, right, line 7, minus the sum of line 14. And line 14, let's say employee benefit programs, let's say you paid out $2,000 during the year. Line 19, let's say you paid out $5,000 in pension and profit sharing. And then line 26, let's say your wages that you paid out to your employee was $30,000, okay, during the year. Okay, remember this is wages. This is not independent contractors or just, you know, 1099. This is only W-2, okay? So what the instructions have asked us to do is take line 7 and subtract line 14, 19, and 26 from line 7, okay? So if we use this example here, we'll take the $200,000 minus $2,000 minus $5,000 found on line 19 minus the $30,000 on line 26, okay? And remember, the wages here do not include owner wages, okay? So let's say for our example, this $30,000 is only employee wages, not you as the owner of the business, okay? So let's say if that number, if a part of that number, let's say $10,000 of this number here was an employee salary or your owner salary, then we would only include $20,000 as a subtraction for this calculation. So after we've done that, let's fill in what that net amount is. Okay, and that net amount comes out to $163,000, okay, for this one. And then it asks us to divide line box A by 12, okay? And we come up with 13,583. But even in this example here, they tell us we're capped at 8,333. So just like our example number 1, we're still capped here, okay? Then what we do is we calculate the average monthly payroll for employees, okay, not including the owners. Okay, so for this example, we know that we had $30,000 of total employee compensation. Okay, so what's the average? We take the $30,000 divided by 12, and it's $2,500 per month is the average monthly payroll for employees, not including the owner, okay? Then we add B and C, okay? That comes out to $10,833 and 33 cents, okay? Now we multiply by 2.5, okay? And then we come up with $27,083, okay? And $83.32. Okay, this will be your new Eidl loan application amount. Okay, and then the rest of the application, you know, what's the purpose of the loan, payroll, cover property, you fill this out. Okay, as well as you applicant owner information, and then you fill this out and you make several confirmations. Okay, and then you submit this to your qualified lender. Okay, the second draw application is very similar, okay, to the first draw. This top portion here, you'll fill out exactly the same way. They're going to ask for 1040 Schedule C, line 7, the number of employees, including owners and affiliates, Okay, then you're going to be filling out the exact same way. If you do not have employees up here, you multiply by 2.5, but with the second draw, the exception is 3.5, right? For if you have a NAICS code of 72, that's usually hospitality and restaurants, okay, you can your multiplier is 3.5 for second draw. Okay, and then if you have employees, it's the same way. You added up the net amount, capped at 8,333, and then you include the average monthly payroll for employees not including owners. You add those up, multiply that by 2.5 or 3.5 once again. Okay, so it's very similar. And the only exception here is, remember, for a second draw, you have to show that there was a reduction in gross receipts of at least 25%. Okay, and they're saying that if your loan amount is $150,000 or less, you may leave this section blank. Okay, but you have to provide information if the SBA ever asks for it, or a time of forgiveness. Okay, so make sure you have that. Okay, and make sure you qualify for that. Okay, so once again, you're going to need your Schedule C, either 2019 or 2020, and then you can have these applications. All right, welcome back. So let's go over question number 3. If you've already applied for a PPP loan using the old method, what can be done? Okay, remember, the SBA and the Treasury have already ruled that borrowers whose PPP loans have already been approved cannot increase their loan amount based on the new methodology. So if your PPP application has been approved, you cannot reapply or modify using the new methodology. But if you've applied and not yet been approved, okay, you may request a modification with your lender using the new methodology. So if you've already been approved, then you cannot change and update it with the new methodology. But if you have not yet been approved, then you can go back to your lender and request using the new methodology. So what I would say is, if that applies to you and based on the gross income method, your eligible payroll is much higher, then I would alert your lender, reach out to them right away after watching this video, and let them know that you want to modify the application. Okay, so quickly, I would act quickly. All right, thank you so much for watching this video. Until next time, I wish you a wonderful day. Bye.